back. It was a crazy week for the stock market. Companies like GameStop saw the price of its shares skyrocket. Joining us now is Brent Wilsey of Wilsey Asset Management. Brent, oh my goodness, we all thought of all of our financial friends right during this crazy week. Number one, what were you doing? What was your reaction initially when you started seeing what was happening?
It was really just shaking my head saying, oh my gosh, this is crazy. And people have to be careful. And Liz, there's actually in finance book a theory called the greater fool theory. And what that theory says is that you're a fool for buying it, and you hope there's a greater fool out there than you that's going to pay a higher price for it. That's kind of what's going on here. And I know there's different theories that other people are saying, like, oh, they're trying to, get the hedge funds and so forth. They're not going to beat them long term. And what concerns me is that a lot of people that don't have the money to lose are going to lose a lot of money and are going to be hurt.
Yeah, well, I mean, why was this happening in the first place? Kind of, if you can just simplify it, and then we'll go from there.
Sure. This was all done through a website called Reddit, and they had a Wall Street one. And then people started kind of reading it saying, well, gee, maybe we should buy GameStop because they discovered that they're shorting shares, which I'll try to explain more in a simple terms for people as well. But by doing that, what happens is a rush to buy these shares, and that causes the price to go up. And as you buy them, it makes a short person that did the shorting lose much more money, so therefore they got to cover their shorts and buy it, and you get this frenzy of up, and up. And that's the problem that people are having. They think this is so easy. And by the way, this happened, I'm going to say about a month or so ago with Hertz. If people remember, it went to 24 from 2, and then where's it now? $1.75. So what is going on is that you got this rush of people trying to buy a limited number of shares. You've got the short covers because, and again, it gets so complicated. This is the problem that people don't understand what's going on, is that you got these short shares that have to be covered, and they're on margin, so they have to cover them. As it goes up, they got to cover more. So you get in a situation, and it looks like it's so easy, but what happens is that when the short sellers stop doing it, people are going to be left holding the bag. And I know we've seen these stories where people are, oh, they made $1 million and so forth. I'm pretty sure in the future, I think the near future, you'll be running a story of Joe Smith who lost all his savings because he thought it was so easy.
Wow. Yeah. I mean, and so that's where you see, I mean, now that we're turning the corner into a new week, where does the situation stand? I mean, tomorrow's Monday. Where are things at right now in terms of the stock?
Well, we'll see tomorrow. I mean, the stock is over $300 a share. It's been going from like 200 to 400 plus. It's a crazy thing. Now, what is going to happen? There are people losing money on it. When you start having these small investors lose money here, they're going to stop doing it. So that float is actually going to decline. People buying, not the float, but the people buying are actually decline, and that's going to take away a lot of momentum. So it will stop, and there's going to be people left holding the bag, probably people that can't afford it. I know one gentleman, he was very wealthy, so I'm going to risk $2 million. It wasn't a big amount for him. Well, he is down right now $700,000. So people will lose money. He can afford to lose it. But again, I'm so glad you're doing this segment. I'm so glad this is all over the news, because people need to be warned. The small investor that has maybe $2,000 not to lose it. I think part of it too, Liz, is it's so easy now. You can do a trade on your phone for free.
Well, that's Brent, that's where this Robinhood comes into play, right? That's how easy it is. I mean, that's one of many right now, right?
Yeah, and they make it so easy, and you hear, oh, it's so easy to trade, and it is so easy to get this information from Reddit. So people, they feel like they're so smart doing this, but they only have a little bit of information, and as we know, a little bit of information is very dangerous. And Liz, the other thing people don't understand, they keep thinking that, Robinhood is stopping the trading to help out the hedge funds. They're not doing that. There's something called imbalance, and that is when your sells don't match up with your buys. And this is a market, and it's an auction market. So you always have to have the other side of the trade. And if it's not there, they've got to stop trading to find those sellers or buyers to do that. So it's not Robinhood doing this. And by the way, actually in Robinhood's, when you sign up the application and so forth, like 36 pages, they warn people, we may have to shut you down from trading, and that's at our discretion. People agree to that. So all these people saying, oh, it's not fair, they can't do that. They can do that. It's in writing.
It's in writing. And if you agree to it, you agree to it. Oh, my goodness. Brent Wilsey, so good to have you on. Thank you for explaining this this craziness. Gosh, we will see.
Thank
you so much.
And people also have to watch out for taxes, too.
Yeah.
They're going to forget about the taxes there.
All right. Good to know. Brent, have a great Sunday. We'll see you soon.
Okay, Liz.
And we'll be right back.